Hey everyone, something fundamental is happening in the world of Bitcoin. For years, we've all known it as this wild, super volatile asset, right? But what if that's actually starting to change? We're going to dig into some evidence that suggests a whole new, more mature market is taking shape.
Okay, picture this. The asset you're watching just tanks. It loses half its value. We're talking a 50% drop. Now for Bitcoin, that has always been the signal for mass panic, a total market meltdown. But this time, something was different, really different.
So you got to ask, right? Was this just another day at the office for Bitcoin? Another classic crash? Or was it something more? We're going to frame this as a test, a really critical test of the asset, its investors, and where it's all headed. And frankly, the results were not what you'd expect.
All right, first up, let's talk about that 50% plunge. This is really where our story starts. This is the moment that kind of pulled back the curtain and revealed who's really in the driver's seat of crypto now.
I mean, a 50% drop. That's the kind of insane volatility that's been Bitcoin's calling card for, what, a decade? In the old days, a drop like this would have sent everyone scrambling for the exits, just a mad dash to sell. But not this time.
So who pumped the brakes on the panic train? Well, this is where it gets really interesting. Turns out a new, very powerful group of investors did something that just goes against all the old logic. They held on.
And look, this isn't just a vibe or a theory. We've got the data. Matt Hu, again, over at Bitwise, he's their director of research, he pointed this out very clearly. He said that while everyone else was freaking out, the big institutional players, the big money, they didn't flinch. They didn't sell. In crypto slang, they showed off their diamond hands.
So diamond hands, what's that? If you haven't heard the term, it comes straight out of internet and meme culture. It basically means you have this unbreakable conviction. You're holding on, no matter what, through the storm, through the chaos, because you believe in the long-term vision. It's the ultimate test of faith in an asset.
And this is the key takeaway, right? What does that behavior actually tell us? It screams that these big institutions, they're not here to play games. They're not day trading for a quick profit. They are looking way past the day-to-day noise, investing with a real belief that Bitcoin has huge potential for returns way down the line. Okay, so this conviction, it's not just a passive thing like holding on and hoping. It's active. They're building stuff. The giants of Wall Street aren't just buying Bitcoin, they're literally building bridges, new, regulated ways for even more big money to get into the game. And here's a perfect example of what I'm talking about. T. Rowe Price, a huge name in investing, filed paperwork to create a crypto ETF, an exchange-traded fund. This is a massive deal. This is Wall Street literally paving a smooth, secure, regulated on-ramp for traditional investors to cross over into crypto. And this really shows you why that bridge matters so much. For one, it gives regular, traditional investors a safe, regulated way to get a piece of the action. Two, just having a name like T. Rowe Price in the mix gives the whole space a huge stamp of legitimacy. And three, all that fresh capital and new interest, well, that just fuels a ton of innovation across the board. So what's the upshot of all this? What's the end result? It's simple. The very idea of who a Bitcoin owner is, it's changing. Radically. We're seeing a new guard march onto the field. And this comparison just lays it out perfectly, doesn't it? You had the old guard, right? Mostly individual retail folks. A lot of them were in it for the short-term thrill, which, is what made the market so famously volatile. But now you've got the new guard. We're talking institutions, big funds, even public companies. They have a completely different playbook, a long-term one, and they're acting like a giant anchor, a stabilizing force in the market.
So let's connect the dots. You've got the diamond hands holding the line. You've got Wall Street building these new bridges. You've got this whole new class of owner. You put it all together, and the conclusion is kind of inescapable. The Bitcoin market is finally growing up.
And the biggest plus side of this growing up phase? We could be seeing a move away from those insane, unpredictable price swings. The steady hand of these long-term players helps soak up the shocks, which could lead to a more stable, and let's be honest, a more predictable market for everybody involved. So just to recap the evidence here, 1, institutions are holding firm, even when things get rocky. 2, Wall Street is building regulated products like ETFs. And 3, the market isn't just riding the emotional roller coaster of retail sentiment anymore. Add it all up, and it points to a future for Bitcoin that is way more stable and way more legitimate. All of which leaves us with this one really big question. For years,
Bitcoin has been the rebellious teenager of the financial world, right? So, are we watching the end of its wild youth? And if we are, what does Bitcoin the adult actually look like? That right there is the billion-dollar question we're all left with.